Prepare yourself, huge volatility is coming here in the next 48 hours for Bitcoin. I will show you exactly what's happening in the upcoming hours, how you can position yourself to take advantage of the next move here to the upside or to the downside, and what I'm actually going to do with that information that I have found here earlier. So if you want to know exactly what I found, then stick around here and let's go, guys. Hi guys, welcome back. So we're gonna start off directly with one of the Bitcoin charts, because I believe what we are seeing here on this chart is the most likely scenario that's gonna play out here over the next 48 hours before we're gonna see here a substantial move to the upside. So as you can see here, that is the chart that I showed you a couple of days ago, where we had here our massive swing low and here the swing high, and now we come down here to test support at around $86,600 all the way up to $87,200. I show you here in a minute why this is actually a really important key level here that the bulls need to defend to have any chance to get a bounce here back to the upside. So but why in 48 hours? Because in 48 hours we are starting the FOMC meeting more or less. So here 3 hours and 15 minutes, but before they have already some meetings around that. Here on the Fed watch tool you can see this, and currently there is almost no chance for a rate cut this month. So there's a 95.6% chance that we are not getting a rate cut based on their own model that we see here, and only a 4.4% chance that we are actually getting a rate cut. Well, I don't know why this is not really here. There, 4.4% and 95.6%. So now we could see it properly. The same goes for Poly Market. On Poly Market also, like for January, no chance at all. So if we go here, January meeting, let me close the order book again. Then here March, 21%. April, that looks like a maybe, 43%. And then here in June, 60%. But we have to keep in mind that this can change really quickly depending on what Jerome Powell will say during the FOMC meeting, and could come out more dovish than hawkish, and that would also lead to a massive risk on pump in all risk on assets, and that includes of course Bitcoin and other cryptocurrencies. So but what you should keep in mind around FOMC, let me show you that chart here. What we need to keep in mind is that around FOMC, we are always getting here the pre-FOMC dump. And that was here, for example, in the 9th of December. Let me just get here the brush tool. So here, if I zoom in here, you can clearly see that here, this candle here, the day before FOMC, we went to the downside, and then the following day is where we got the pump to the upside. And that was the FOMC pump. Was of course not sustained, and we went and chopped in here to the downside. So but usually if we get a pre-dump or dumping into FOMC, then just after FOMC or around FOMC we are going back to the upside. So and this is what I also expect here. I expect here now in 2 days that we are getting continuation of this downwards move, and then on Wednesday, when FOMC is actually happening, that we're gonna start moving back to the upside. So, and these are also the levels that I just shown you that I anticipate to be hit when we are coming down here. So, but before I talk about these levels in specific, what I also want to talk about is that Tom Lee came out again and said that he changed his stance now to compare to what he said before. So, if you don't know who Tom Lee is, he has a hedge, he has a fund. One of the biggest Ethereum investors, made a deal with Mr. Beast right now, invested into Mr. Beast, his company, to diversify profits out of his strategic Ethereum reserve fund that he has. So, and he has always crazy predictions where the price is going. He said like Bitcoin should hit like $180,000 this month, and Ethereum like $10,000, and then $80,000 for the rest of the year. And if Bitcoin should hit $200,000 to $250,000 this year. So, but now he came out and actually said something. He said like that the first half of this year should be turbulent and driven by institutional repositioning before a strong second half. So he is anticipating that we are getting a strong second half of this year, where the markets are going to rally, which would of course be really, really bullish. And we are also already in January. So what is another 4 or 5 months, you know, while we already endured the whole turmoil from last year. So I can wait another 4 or 5 months before things start to go crazy, even though I anticipate that this will happen, that we get like a small pre-run before that in the next couple of weeks and months. And then like the summer haul is gonna happen, and then after the summer haul, then he is right, and we're gonna get this second stage that will go absolutely banana. Now, when we are then going back to Bitcoin, then here on the daily chart, on the daily chart, you can also see here why the underlying level is so important, and that we are most likely gonna hit that level. It will be a quick move here. This is on the daily chart, by the way. I'm here on the daily chart. You're gonna see that move happen quickly to the downside and then straight back up. I'm not saying that we go back into the ascending triangle. We could just tap here the upward sloping trend line as resistance and go back down. But when we are breaking down from this, we're gonna hit here that box area, which is 86,000. What is this? 86,900 to $88,000. So just that you see it over here, $88,000, and then if I go here down, $86,900. These are the zones that we are looking at in that scenario here. That's why I also lowered my my entries for the overall trade setup. First of all, a trade setup only into the neckline of that ascending triangle, and then a continuation trade if we would break through that. So I would set, if we reach at the top side, I would set my stop loss kind of here, and then see what price is going to do if we are reversing, or if we are actually going to see here a nice move and continuation to the upside, and I just take full advantage of that then, if that is going to play out in that way. Yeah, guys, and don't forget, if you want to take these trades with me together, then go here under my YouTube video. Under my YouTube video, you can sign up either on WEEX or on BYBIT. Both exchanges are fine. And go then deposit $500 and get access to my free and private Telegram group. Use this link here to access the Telegram group. That's the only link that works to access this group. So and then I'm gonna help you to turn $500 into $10,000. We're gonna do it this year once again. So again, in the description here below, use one of the two links, follow the steps here, and go to the Telegram bot, and then you will get access to the channel. I have already money here on WEEX. I showed it to you guys yesterday. $28,350 is what I have here. Exactly for that scenario where we move a little bit lower and take a trade from there, then massively back to the upside. Now on the shorter time frames here, oh, this is actually a 1 minute time frame. Sorry, I wanted a 15-minute time frame in this chart. So here, our trading range for this weekend is here the orange line, and that was our Friday range that we created over the weekend. We have lost this range now, and now we are retesting the lower levels of this range, which is not good, guys. You know, we could reach all the bottom here, $88,400 approximately, and I'm gonna show you now here in a second why this is, in the cards, I would say. So, and when we're looking at this from a liquidity perspective with the liquidation levels, then you see here there is still some liquidity left on the long side that could lead to that we are moving down there to take this out, you know. So first of all, of course, we're gonna tap here this liquidity pocket, and then we could go all the way down here just with a wick, tap this and go back to the upside. This is over the last 24 hours what has built up here. So, and yeah, it is right now definitely in the cards that we could potentially go and tap these areas, unfortunately. Now, when we are going then to the 50-minute time frame, back here, and then also here you see that price action is actually looking bearish, and we are potentially rolling over here. And again, what is the bottom line here? $87,000. On the higher time frames, exact same level that I mentioned earlier, $87,000. And then here the sand in the the line in the sand is $84,985. And this is also the cost price for ETFs right now. So this level needs to hold when we get down here. If we would lose that, then also there would be a cascade of sales happening with ETFs, and that's something that we don't want to see at all. and therefore bulls need to massively defend this level. But like here, a rollover all the way down to $87,000 is something that you should expect around the FOMC meeting before we get then a move and a swing back into higher levels. And that's it already for today's episode, guys. I hope you enjoyed it. Make sure that you smash the like button, hit the subscribe button, hit the notification bell, and I see you again with a bigger portfolio tomorrow.